My Portfolio. Pimp My Portfolio.
That's right. This is a segment where we bring in a community member and an expert, and we get that expert to review the portfolio. And today our expert is Adam Dawes. Adam, welcome.
Great to be here, guys. Thanks so much.
Now, before we jump in and introduce our community member, a reminder that Adam is offering personalized advice on your portfolio for $750. You can go and sit down with him and do a Pimp My Portfolio, where he'll actually provide you with a limited scope statement of advice. So if you want some professional advice beyond what you're hearing on the show, that is an option. Head to equitymates.com/advice. But without further ado, let's welcome to Equity Mates, Maddie. Maddie, how are you going?
I'm good, guys. How are you?
We're well. Thank you so much for submitting to Pimp My Portfolio. Looking forward to getting stuck into this. So, Ren, take us through it.
Yeah, all right. Well, Maddie's portfolio is a mix of some index ETFs, some thematic ETFs, one individual stock, and a small allocation to gold. So 60% of the portfolio are sort of country or region-based ETFs, A200 for Australia, the S&P 500, equal weight, not market cap weight. Interested to get Dawes's view on that. And then an Asia ex-Japan ETF and a Europe ETF. So that's 60% of the portfolio right there. Then about a quarter of the portfolio is thematic ETFs, battery tech and lithium, FANG Plus, and global agriculture. Then the one individual stock is Macquarie Group. And as I mentioned, then we close out the portfolio with a little bit of gold. So, Dawsy.
Yes.
What's your nickname for the portfolio?
Well, we're going to call it the Lone Ranger because there's only one single one single stock in this one. The lonely Macquarie that's sitting in there, which is a great one, and don't ever sell it because it's a great business. But it is definitely a Lone Ranger amongst lots of other thematic ETFs.
Nice.
Yeah.
Maddie, what do you think?
Yeah, that sounds about right. I'm a bit scared of individual stocks, so yeah.
How did this portfolio come to be?
Oh, it's been about 4 years, I think I've been investing, and honestly listened to you guys and just started throwing my money at things that originally the A200, I'd heard about good to have an index fund, and then started doing a few of the thematic ones, and then started learning more about the core and satellites, so then went to the few other regional based index funds, started adding to them. So now I auto invest into those 4 every month, and when I get a little bit extra, I look at some other things, but haven't really bought anything new, just those other ones I've already had sitting there, sometimes top up.
Nice. Well, definitely can't fault the strategy, because we obviously talk about that day in, day out here at Equity Mates. So, Dawsy, what are your views?
Yeah, so look, it is a good little portfolio. There's a couple of things. Obviously, the thematic ETFs, you've got to be a little bit careful with thematic ones. I think index ones, you're doing really well. That's fine. Thematic ones basically come in and out of favour, and ETF providers put these lovely thematic ETFs out there to talk about lithium or battery technology, right? So, and we know that lithium's not doing so well at the moment, and obviously battery technology sort of fits in there. You're still in profit, which is great. So you've obviously bought that a while ago, the ACDC or the battery tech one. But yeah, just be a little bit careful about those thematics, because they come in and out of favour, and you can be holding them unless you're trading them. I think you can be wrong-footed if you're not being active with them. So we still like the lithium story, but at the moment it's oversupply. Demand's still high, but there's oversupply, and so you're seeing all of the lithium stories being hit. Now, does that worry you that you sort of, it might not, but I think you've got to sort of try and build the portfolio with one, an index in mind, but then 2, having some thematics in there, but not, I guess, as much. I guess it's not as much. I do like the food one, the global agriculture, and it is hedged. And we haven't talked a lot about hedging in any of these Pimp My Portfolios. But as interest rates come down in the US dollar is falling, and the Aussie dollar is going higher. And hence you'd like to have some more hedged products, and ETFs. Most ETFs have a hedged product and an unhedged product. Most products, looking for that hedging at the moment, just takes out that currency fluctuation and allows the portfolio to do what it's supposed to be doing, which is going higher. it is a little bit more expensive on the MER, the management expense ratio, because there is some hedging that needs to go inside of that. But that's something that you could potentially look at for any other new international ETFs that you're looking at, because the currency has really gone from 61, 62 cents, 68 at the moment, potentially could go to 72 cents. I don't think it's going back to parity, and the US dollar is falling. So that does hurt your portfolio a little bit with that currency movement. But overall, I think it looks really good. You know, I prefer for you to have more weighting in the gold space, albeit the gold stocks have rallied and the gold has. I think that as interest rates keep coming down, gold will continue to perform. So you probably want to lift that up a little bit, and then certainly looking. Don't selling those Macquaries. I think you're doing really well on that one. That's for sure.
Okay.
So, Maddie, there was a fair bit there, but I think some good tips. One that I mentioned when I was introducing your portfolio that I don't think we've seen a lot before in this segment is an equal weight S&P 500 ETF. So the ticker is QUS. So, Dawesy, how do you think about equal weight v market cap weight?
So it makes sense to have an equal weight ETF, right? So here in Australia, because it's probably easier for us to talk about here in Australia, if you've got a normal portfolio that's, say, the A200, the banks and resources will make up over 30 to 40% of that weighting. Just in one resource company, BHP, is 11% of our index, right? So by having normal weighted or index, it will then continue, and if BHP falls, the overall index will then pull back as well. But by having equal weight, it takes out all of those Commonwealth Bank, BHP, those big companies, Google, Microsoft, those kinds of things, and it basically then allows it to be even across the entire board. It is a great way to look at if you are seeing concentration risk. Here in Australia, it's the banks. Concentration risk is that, you know, if the banks don't perform, then the rest of the market doesn't as well. So I like the idea of equal weight. You've done okay on it, like it's sitting up okay. I don't think there's too many other equal weights out there, other than America, Australia, and those kinds of things that most people want to get the full advantage of what the index provides. But it is a good way to overall hedge the portfolio against too much concentration risk, which, you know, here in Australia is the resources and the banks, and it allows you then for the rest of the portfolio to start performing. So I think it's a good call, and, you know, you could continue to keep putting money to that if you're doing some dollar cost averaging at the moment.
Yeah, cool.
The challenge with it is that the top of the market is the one that drives a lot of the returns at some points in time. So yeah, I can understand. Maddie, did you have any questions for Adam?
No, that pretty much all makes good sense. Yeah, I have to admit the battery tech and lithium, that was one of the early buys a few years ago, and I have since learned I'm not focused enough on my investing to really follow thematics closely. So I need to accept that.
Funny that you said you were scared of individual stocks before, which I think is a completely reasonable way to approach investing. Like if you don't have the temperament or the interest to like really pay close attention to stories, you don't need to. But I just thought it was interesting because the way I now think about thematic ETFs is a lot like individual stocks. You need to pay attention to the story and keep up to date with news. So maybe that's how, you know, the distinction between thematic ETFs and individual stocks may not be as large as you might think because they're different products.
Yeah, that's actually a very good way to think about it, and I think that's where my brain has slightly started pushing me. But
and you've got some European, you've got some Japan, you've got some US, that kind of thing. Yeah, so that's quite good. You're sort of trying to spread yourself around the globe, as it were. Potentially looking at to sort of wrap it up, looking at sort of a world ETF. Or potentially, there's a really good one out there, Qual. We've talked about this one, which is a quality ETF. That's got a hedge product in there as well. Potentially looking at something like that might just sort of wrap that portfolio up a little bit more and to give you a little bit more performance across the portfolio. But I think overall it's looking really good.
Well, Maddie, I think you know the headline is you're doing a lot right, and so you should feel happy with where you're at. And you know, there's obviously some areas where Dawsy's giving you things to think about, but I think you should keep going confident that you've made a great start. So well done.
Awesome. Thanks, guys.
Nice, love it, Maddie. Well, thank you so much for submitting to Pimp My Portfolio. We certainly appreciate you sharing this with the rest of the community. So we wish you all the best with it, and have a great day.
Well, thank you, and thanks for having this segment on the podcast. It's very helpful.
No, great. Well,
That's
we appreciate
good.
that.
Thanks, Maddie. We appreciate it, and we appreciate you being brave enough to share your portfolio as well.
Yeah, no, the nerves are a little high.
If you would like to submit to Pimp My Portfolio, head to equitymates.com/contact. All the information is there. And if you would like to speak to Adam and get some professional advice on your portfolio, head to equitymates.com/advice. We'll hook you up with him and you can get that process started. But Adam, as always, thank you so much.
Great to be here.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.